Well, good morning, everyone. Today is, what is it today? Today is Thursday. I'm losing track of days. It's Thursday, it's October 3rd, and boy, oh boy, I hate to say I told you so, but I told you so. I've been telling you guys for days that the S&P would start moving back between the 50-day and the 200-day moving average, and we're right there. The Russell, the giveaway was the Russell, the small caps. Too much pressure on the small caps to continue moving higher, and they push the rest of the market lower. Let's talk about the news. Let's talk about everything using a top-down approach, because I want to go a little deeper today than usual because the market really sold off last 2 days. I think we had an 800-point down move in the last two sessions on the Dow, but not to worry. So in about 12 minutes, we're going to have the jobless claims number. If the number is lower than the if the number is closer to 200,000, 199,000, lower, 200,000, it's going to be positive for the economy. It's going to say that jobless claims are lower. If the number is going to be above 220,000, that's not going to be good. That's going to be the big thing today. So keep your eye out on the jobless claims. Let me show you what the consensus is so you could see the same thing I'm looking at the same time. Yeah, consensus 16,000. So if the number is 202,000, 203,000, 204,000, that's positive. If it's 219, 220, 225,000, that's negative. So that's what you should be looking at. Now, global news. Europe vows to hit back U.S. tariffs as business count cost. Yeah, this is a big problem because this can cause Europeans to lose jobs. If there's going to be an export ban from cheese to wine, that's going to cause weakness in production in Europe. That's not going to be pretty. And Europe is going to make U.S. pay for that. So we don't know how that's going to shake out yet. That's looming. And it would be really nice to have U.S. and China resolve their tariffs before this drama comes into play, so to speak. So that's the fundamental picture right now. Everything's there's a lot of uncertainty right now in terms of European tariffs, whether China and Trump are going to resolve their differences. Will Jerome Powell tomorrow talk about lowering interest rates again? And that is going to depend on the jobless claims today, if they're going to be in the lower 200s or upper 200s, and the employment data tomorrow. That's fundamentals. Now, let's jump into technical and momentum. Momentum, the market fear level is high right now. It was kind of waning a little bit here. It was sitting on the sidelines, but once the market broke, the Dow broke about 800 points, we went to the 127 level. What is that telling us? It's telling us that the market is stretched out right now. This is telling us that the market is close to pulling back. And that's also being consistent with the fact that we're trading right in between the 50-day and the 200-day moving average. And it looks like we may come down a little bit more, but the odds are we're going to be spiking back up, or actually expect this type of trading action, the kind of trading action we saw in August. More of a sideways, especially if we don't bounce really hard the next day or two. Typically, here's what you'll see. When the market sinks below the 50-day moving average, you'll see a really fast bounce. Or if you don't see a really quick bounce within a day or two, you'll typically see the market becoming stagnant and choppy, kind of like what we saw here. Not expecting too much more downside because we're fairly stretched out. And even though the market dropped about 800 points on God knows what type of fear level, global economy, interest rate, just about everything, Europe, China, the VIX, which is the volatility index, this counts fear in the market, it barely spiked to 20. And let me show you a long-term graph. As you could see here, when something really bad happens, really negative, it spikes. And the market dropped below the 50-day line, and we barely went to 20. That, taken into account with the fact that put to call ratio is already at 127, which you could see here is fairly stretched out. Anything above 115 is telling us the market's oversold. The odds are strong. This is the E-mini. This is the overnight session right here. The odds are strong that we're either going to hang around here for a while or jump back up. Don't expect too much more downside unless there's some other catalyst that comes out that's unforeseeable or something that we don't know that's not priced into the market. So expect a little choppiness. Keep your eye out on that low level on the E-mini S&P 28. It's the 287 level if you're looking at the SPY. Let me just look at the SPY here so you could, because I know a lot of you don't trade the E-mini, you trade the SPY. So let me show you the SPY. That's the 200-day line. That's the 200-day line. That's the 50-day line. And we're right here on the SPY. We're opening just a little lower, but we're still above the high. Put a alert to 286.80. If we break that level, we're probably going to go down to the 200-day line. More likely than not. If we go up from here and if we hold the low, the 286, 287 low, the odds are we're going to go higher. If we take out the high, 291.48, 291.50 high, the odds are we're going to, today, if we hit it today or tomorrow, the odds are, or before the end of the week, the odds are really strong we'll hit back to the 50-day and move higher. But again, keep your eye out on the speed to which we move back up. If we stick around here for the next day or two, the odds are we're going to see what we saw in August. Congestion and sideways trading action. And again, if the odds are, if we move higher, really quickly bounce back up here and start moving to the 50-day line and touching it, the odds are we'll hit above the 50-day line before the end of next week. So again, the next few days are going to be important. Keep your eye out on the 291.50 level, 50-ish level, and the 286.70-ish level. And again, this is the big news report over the next 2 days. We have the jobless claims, 205,000 bullish, good for the stock market. 220,000, 225,000, bad for the stock market. Take that into account with the employment data tomorrow and Jerome Powell speaking. And I don't know what he's going to say, but keep your eye on what he's implying. Is he talking about doom economy or gloom economy? Is he going to talk about things not being so bad in the future, or things being better than expected, or things being worse than expected? That's going to give us a good tone of whether they're going to lower rates again or not. Based on what I'm seeing right now with Europe and this wine and cheese tariff, I'm sorry, wine and cheese, but that's how it all starts. It starts with wine and cheese, and then it ends with $1 trillion in tariff war. So again, be very careful, be mindful of what's going on right now. There's a lot of uncertainty, and there's a good chance the stock market will stay between the 50 and the 200-day moving average. Sorry I went a little over today, but I wanted to give you a complete picture of what I'm seeing. Talk soon.